Hey traders, this is Blake Morrow with Traders Summit, and with me today I have Bill Baruch from Blue Line Futures, and I'm super excited to have him here today. And I want to tell you the reason why we're going to have this conversation today is that in recent months we have seen a big divergence between what has happened in gold and what has happened in Bitcoin. And there's been a big conversation on the street about, hey, is Bitcoin an alternative to gold? Are people shunning gold and going to Bitcoin? Are people actually using Bitcoin as an inflation hedge? And, I thought to get the answers, why not go to Bill Baruch, somebody who is the president and CEO of an actual commodities brokerage firm who sees a lot of the order flow, and get his opinion. So Bill, welcome back.
Thank you for having me on again. It's a great topic.
It's a hot topic. It's something that, you saw the chart there. We've really seen gold and Bitcoin diverge. And that's the constant talk I hear from traders are, why would I want gold? Why would I want gold when I can have a safe haven asset that's a digital asset that I can just hold and it's mine? So what do you think about this whole conversation?
I think gold has a place in everybody's portfolios. And, I trade it daily. I trade it with my clients on the future side, but as an investment advisor as well, I own gold within portfolios. And you mentioned as an inflation hedge, we have a real assets bucket, and that real assets bucket, has everything from midstream energy and REITs and metals exposure. But I do think too, Bitcoin has made its way into that real assets bucket, not officially for us yet, but having conversations with clients, I've been telling them that, just open a Coinbase account, get really simple. I know we're talking about people, age ranges from 30 to even 60 in retirement listen, crypto, Bitcoin, Ethereum, that do have a place in your portfolio. And I think that's really a trend, not just, we're traders and us who are in the markets every day, but the everyday person, the normal person that's not an everyday investor is getting that exposure as well in their portfolio. So it's a great conversation. And we've seen some mini divergences and from over the past year too.
So you're saying since the past year, and for me, what I've noticed is really all of 2021, up until maybe the last couple of weeks, I've seen a big, divergent move. And the one thing that we've seen in crypto is we saw crypto hit new highs in 2021, Bitcoin specifically, and obviously a lot of the other coins as well. But gold really couldn't hit the peak that we had in 2020. So what do you make of that price action alone?
Well, Bitcoin in the crypto space have certainly stolen a lot of gold's thunder. I think this is something that was really working, baking, if you will, for a while. And you look back to last year, when before the pandemic, really when gold had open interest surged to a record high in January of 2020, about 800,000 contracts. And it quickly fell. And one of the things too is remember back to the onset of the pandemic when that deflationary event, when Saudi Arabia announced with the oil policy, and everything really fell through March and the onset of lockdowns. Gold went too. It was a deflationary event. And at that time, gold had, I look at the managed money and commitment of traders. It tells me what hedge funds are doing really. In some manner too, it's money that could be chasing things when you can tell if the boat is overloaded to one side. And at that time, the managed money net long in gold was about 240,000 contracts, and the record is just under 300,000 contracts. So when that gold sold off in March, the managed money took a big hit. It actually ended up trending to this year or late last year as low as 40,000 contracts. But initially it fell down to, let's call it 120,000 contracts. And it's a lot of money coming out of gold at that time. And if you look at it, about 1,600, 100,000 contracts of 100 ounces of gold, it's about $160 billion worth of gold that fell out. That sort of just the open interest disappeared and the market lost. Even when gold a couple months later in August set a new record high, nearly $2,100, the managed money net long still never recovered. That tells me right there that the interest was sort of being lost within gold. And at that time, crypto really didn't dig itself out of a hole. But I think, again, something was baking. Things were moving, and money was moving hands. And if you look at the start of 2020, the market cap for Bitcoin was about $150 billion. By the end of 2020, it was $550 billion. So you could see money was moving around a bit there, and that was definitely noticeable.
So let me ask you this, Bill. You said, and right when we started, you're like, Bitcoin isn't quite there yet for Blue Line, in that bucket, right? First of all, I guess, this year we've seen Bitcoin lose quite a bit of its value from the highs that it traded. We're back below the 200-day moving average. I have two questions for you. A, what happens to gold if Bitcoin, what do you think happens to gold rather, if Bitcoin continues to drop, and let's say it loses another, from current prices, loses another 20, 30, 40% in value, do people come back to gold? And then the next question is, if crypto is really here to stay, what puts it in that bucket for you? What is the determining factor for you?
Yeah, that's great. And I think what we saw through the gold's recovery after that low in late March is when Bitcoin did top out and finally sold off in May, you definitely had days where gold had capitalized and gold had moved higher when Bitcoin was falling. And I think a lot that was taking place too with Bitcoin over the past month is there's funding opportunities. One of the most simple ones is buying the spot and selling the futures. And these edges have been slowly being lost. So some institutions are backing out of it because they're institutional traders, institutional companies, they're coming in with what they feel high probability or almost guaranteed moves in the market. And that was one of them where they would buy that spot and sell the futures and other yield opportunities within the space. So a lot of that stuff is dissipated, and that's taken a lot of wind out of the sails for Bitcoin. And I mean, it's coming into an area of a lot of value. And that leads me to answer your next question. My job at Blue Line Capital, not Blue Line Futures as the futures and commodities brokerage firm where we're trading. I mean, I'm more aggressive with things, and really that's the money that's the risk capital for clients. At Blue Line Capital and my investment advisor, my job isn't to create wealth, if you will. My job is to maintain, preserve, and add value to wealth. So for us, adding Bitcoin wasn't something that within that real assets bucket that we needed to do in trying to say, last year, pick a bottom and foresee a move. But as I said, we did walk clients through on using Coinbase and doing it on their own and making sure that they had some exposure if that's something that they felt that was good for them. And I've owned crypto in assets and everything from going in 2017, going way back. Everything from Bitcoin and Ethereum and Ripple and Stellar back in 2017. So I've been involved in the space for a very long time. I've been a believer in the space. And, through the weakness of this week, I was buying Ethereum when it came down. And there's some great technical levels to look at Ethereum. I own gold and I own crypto.
That's interesting. Well, Bill, I tell you, it's just a really enlightening to have this conversation with you. I think traders at home and in their offices are going to get a lot from this conversation. And I want to thank you for spending the time with us today and kind of, helping us figure this all out.
It's wonderful joining and discussing it. I think it's only become a conversation that's more and more relevant over the years.
I believe so too. So guys and gals, this is Blake Morrow, and I'm with Bill Baruch. And remember, visit Bill's website at bluelinefutures.com, and you can find the link in the description of this video. Thanks again, Bill.
Thank you.